Chart pattern example case study 77. Pinterest stock chart. Sharp evening star price action has taken place over the last 3 days. This is very normal since resistance extends down to at least 23.05 from the low of the IPO range, instead of starting near 25 like a regular gap down fill range. A gap up in mid-February doesn't fully clear the gap fill range after it quickly fails to maintain its high and closes much lower, back into the center of the IPO range. The result is a pair of clear long-term downtrend lines, the lower of which directly contacts the gap up closing price, since there is high volume, and the overall trend line still lines up with other clear swing points. A look at just closing prices helps clarify the choice of the lower downtrend line some more. As usual, the choice of 2 downtrend lines proves to be helpful as a gap down in May and moderate volatility appear. This is where resistance is encountered in the wider trajectory between the 2 trend lines. Now there is an even wider transition zone since there is the intersection of the 2 uptrend lines as well. A few consecutive closes above the upper downtrend line will mean there is also a greater chance of clearing the early May gap down fill range and establishing into the lower 20s. After closing over 21.28, there was flat movement due to no exceedingly high bullish volume, though at this stage the downtrend lines were cleared. Then there was stronger support potential during a minor bearish retracement in mid to late June, when the upper downtrend line reversed rolls to offer support, which was bolstered further by close proximity to the lower uptrend line. The crossing of the pairs of downtrend lines and uptrend lines provides another visual representation of the transition from a downtrend to an uptrend within a wider transition range. That also incorporates a small gap down range in this case. As July starts, the uptrend is not overwhelmingly strong, but still quite stable as a minor increase in constant bullish volume puts the chart back over the IPO price. Then there is a normal bearish retracement to stabilize the uptrend some more prior to the decisive gap up. Record highs conveniently mark a relevant range of resistance that can also be used as the wider gap up range. Incidentally, this aligns quite precisely with an earlier gap up and triple top range that also formed a larger flat top shortly after the IPO. Resistance was firm just as expected. There was a normal neutral to bearish phase, but activity was low overall and moderate selling volume didn't begin closing under the gap up candle for a larger bearish reversal and gap fill. Instead, there was a noticeable incline starting September that was soon followed by some volatile volume spikes as a triple top gradually failed and gave way to an aggressive bullish continuation. Bullish strength is even greater as seen by general 3 methods rising price action, comprised of 2 gap ups. Inevitably, there is bullish overextension, but only in the short term. A small double top technically completes into November, but is immediately reversed by a clear bull hammer just contacting the highest gap up fill level of 52.10. This produces a clear uptrend line to reference, along with the older uptrend line that still has residual influence. As usual, there is flatter price action after these 2 uptrend lines are crossed. But since the key 64.37 level holds as support, the overall uptrend remains intact to reach new highs later on. 64.37 is directly taken from the open of the bearish star that forms the gap up level and first downswing in late October. This can be rounded off to 64.40, but it makes little difference in this case as later upswings on it were quite precise. Naturally, this will still be a key long-term support area in the event of a large drop.